$18 trillion. Well, that's how much wealth China's property market erased since 2021, and nobody noticed it actually finished happening. There's no Lehman Brother moment here, just a slow motion loss buried across households, local governments, and banks that never marked the losses down. Here's where the money actually went and the pipe that runs straight into your 401k. Let's check this out.
Somewhere in China tonight, there's a family living in an apartment that is worth 40% less than what they paid for it. They are still making the full mortgage payment every month on a home in a building that took 3 extra years to get finished. They did nothing wrong. They saved for years, they bought, they followed every rule they were given. And they are a big part of the reason the rest of the system is still standing. For 5 years, you were promised the opposite of a quiet family in a finished apartment. You were promised a crash. China's Lehman moment. Evergrande bringing the whole thing down like a row of dominoes. Well, it is July 2026. So where is it? Here is the part almost nobody will say out loud. It already happened. $18 trillion of housing wealth, gone. That is close to an entire year of everything China produces erased from the country's family savings accounts. You never saw a crash because there was never a crash day. They buried it in slow motion. And in this video, I'm going to show you the 4 places they hid the body. Who walked away clean while ordinary families held the loss? And the one pipe that runs from that graveyard straight into an American retirement account. Let me start with the scoreboard because the collapse is real and it is measured. Adjusted for inflation, home prices in China are back to roughly where they sat in 2006. That erases about 15 years of gains for the country's middle class, and prices have now fallen for 17 straight quarters. In the resale market this past June, prices were down about 7% in the biggest cities, more than 8% in the mid-sized ones, and in cities like Nanjing and Wuhan, they were down more than 11% in a single year. This is not a prediction, it is a post-mortem. So why did it never look like 2008? That is the whole story, and it comes down to one decision. Every financial collapse follows one iron rule. The loss does not disappear. It gets placed on somebody. In America in 2008, the loss was placed on the banks, and the banks blew up in public and prices cleared in about 18 months. China watched that happen and chose a different target. In China, property is about 70% of a typical family's entire wealth, more than double what it is for an American family. That made households the biggest sponge available. So when the developers ran out of money, the loss did not hit the banks first. It flowed downhill toward the people with the least power to refuse it. Follow it down, because this is where they buried the body. And there are 4 graves. Grave 1 is households, and it took the first and biggest loss. Roughly 20 million apartments that families had already paid for were left unbuilt when developers like Evergrande ran dry. In 2022, buyers in hundreds of projects across dozens of cities did something almost unheard of in China. They stopped paying the mortgages on homes that did not exist. Beijing's answer was a program with a comforting name, Guaranteed Delivery. And it is real. It does get the buildings finished. But listen closely to what it actually promises. It guarantees you the apartment. It says nothing about the price. You get the concrete, you do not get your equity back. That is the entire trick in one sentence. Grave 2 is local governments. Selling land used to be about 40% of their income. When that dried up, their financing arms were forced to swallow the unsold land and the debt that came with it, which is a big reason the International Monetary Fund now estimates China's real government debt at around 124% of its entire economy. Grave 3 is the banks. Through a program called the White List, they approved more than 7 trillion yuan in loans to finish stalled projects. And then, quietly, in early 2026, Beijing gave the banks permission to stretch the repayment on those loans out by as much as 5 years. Loans, everyone knows, will not be fully repaid. That will now simply never be marked as losses. Extend and pretend. turned into official national policy with a 5-year stamp on it, and that is why you never heard the bodies drop. 3 of the 4 graves are inside China, sealed shut by the state. Now, there is a name for choosing this exact path, and it comes from Japan. After 1990, Japanese land prices fell about 70% over 15 years. But Japan never had a crash weekend either. It flatlined. Its banks carried loans everyone knew were dead for a decade. Households paid down debt instead of spending, and the country went sideways for an entire generation. An economist named Richard Koo gave it a name: a balance sheet recession. And here's what it means in plain terms. When the value of what you own collapses, but the debt you owe does not, you do not get a fast, violent clearing. You get a slow, grinding tax on ordinary people for years. China did not avoid Japan's fate. China chose it and then upgraded it because, unlike a market, a government can simply order its banks to pretend.
Hey, real quick, just want to advertise Real Estate Crash Bundle, a bundle of courses that shows you where we are in the real estate cycle, how soon it's coming to an end, and what you can do to make money from it. So take a look at that link down below. An amazing deal on all those courses. Now let's get back to the video.
So who actually paid and who walked? Start with who walked. Evergrande owed more than $300 billion. Its liquidators have clawed back about $255 million, a tiny fraction of 1%, because 90% of the assets sit onshore in China, legally out of reach. Its founder, Xu Jiayin, pleaded guilty to fraud and bribery this past April after regulators found the company had inflated its revenue by roughly $80 billion. The state banks were made whole by decree. The officials who signed off on the land sales kept their jobs. Now, the 4th grave, the only one that was ever forced into daylight, it is offshore, and it has American names on it. Global funds you could hold in almost any retirement account were sitting on this developer debt when it broke. As of a filing back in 2023, BlackRock was holding over $350 million with Allianz, Fidelity International, and HSBC in the same paper. Those bonds now trade for single-digit cents on the dollar. So picture someone in Ohio with a few $100,000 in one of those target date retirement funds. He never bought a Chinese anything in his life, but the international sleeve of his fund held some of this, and his diversification quietly ate a loss that Beijing's own banks flatly refused to take. He never noticed. There is a second pipe too. A country whose families have stopped spending has to dump its cheap goods somewhere, so it floods the world with exports, tariffs snap back, and the trade war that started in a Chinese housing market eventually lands in his factory town. Here is why this matters for your own money wherever you live. A crash and a slow managed bleed are 2 completely different animals, and confusing them is how ordinary people lose. In a real crash, prices overshoot downward fast and violently, and then they clear, the way American housing did from about 2009 to 2012. In a managed deflation, there is no bottom signal at all. Prices just keep sliding, a little more every month, and the deal always looks cheaper if you wait, which is precisely how people reach out and catch a falling knife far too early. China is now more than 5 years into its version, and the ratings agency S&P does not expect a true bottom until the late 2020s. Think about what that means for the family that bought at the top. They are not waiting 18 months for the market to clear the way an American family did in 2010. They are staring down a decade or more of their biggest asset drifting lower, while they keep paying the full mortgage on it. That is the real cost of the slow poison over the fast crash. The banking system stays calm, and the household bleeds instead, for years, in silence. And notice the tell that it still is not working. Beijing keeps announcing measures, relimbing programs, subsidized housing conversions, round after round of rate cuts, and prices keep falling anyway. When an official journal of the Communist Party itself is publicly calling for more powerful measures, that is a government telling you, in its own words, that the stabilization has not held. Because here is the thing that should stay with you. A couple of weeks back on this channel, I showed you American banks quietly extending and pretending on commercial office loans that everyone knows are underwater. Same exact move. China just ran it at national scale with a 5-year stamp and aimed it at families instead of banks. The lesson is not that China is uniquely cynical. The lesson is that the tool now exists and it is proven. When a bubble bursts, a determined government can choose who eats the loss, stretch it across a decade, wrap it in the language of stabilization, and keep it out of the headlines. So the question that actually matters for you is not whether your housing market can fall, it is who your own system would pick to absorb it if it did, and whether you would even notice that you had been the one chosen. So go back to that family in the apartment worth 40% less, still paying in full, in the building that finished 3 years late. They are not a side effect of China's crash. They are where China's crash is being stored. Every calm, stable headline you read about the world's second largest economy is being paid for, quietly, out of a savings account that belongs to people who followed all the rules. Watch 2 things and you will know whether it is still not fixed. Whether those 5-year loan extensions get quietly extended again in 2027, because a second extension means the losses still cannot be faced. And the court ruling coming this summer on whether Evergrande's auditor shares the blame, because that decides whether anyone who signed off on the fraud ever pays for it. A crash never disappears. It just moves to whoever cannot say no. Learn to see who that is, and you will understand more about the next 10 years than the people writing the headlines. Economic Ninja is out.